Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, I've got a chart up here of the December Treasury bonds. They completed the ABCD. We took out the highs of the 6 by one tick, 26.29. If you sold that, you put a stop at 127. You're only going to risk 3 points on that, or $90. That's all you're going to do if you do that. We have a trade possibly in vogue right now. Hold on just a second, and we'll see if we can get this up here for you. All I got to do is find it. Just a second here. And we'll get over here. There it is right here. There's the old, here's the old crude oil. There's where we are in crude oil right now. If we look at this on the daily basis, we were waiting for the market to come down and make a new low. As you can see, we've made that new low. And all I was doing was going down, taking on a smaller time frame, moving it over like this. And when we had this little tiny bit of a pullback here, I felt that was a pretty good chance to enter, which was 45.48. We'll blow that up so we can see it. Now, this is short-term trading, folks, but by golly, you don't have to risk very much when you're doing this, and that's the whole key to what we're watching here. There was your pullback right here. Sits right in there at that level. Now you got your stop right here, and you wait and see what happens. There was another reason for to look at that, because if you looked at that swing earlier in the morning, it went right down to the 1.618 expansion here, also telling you that you had very little to risk at that point. So that's one of the reasons, the type of trade we'll be looking for on Friday when we do our live session. There will not be a radio show tomorrow. TFNN is in process of moving, and so Thursday will be the day off, but I'll be live trading on Friday, and there will be a show tomorrow. And our guest tomorrow will be Jeff Huge of Alpha Insights, and as I mentioned, Stan Harley will be our guest today. So those are a couple that I'm paying close attention to. We've got another one down here that's beginning to look interesting. Let's just get this out of the way here so we can see some of these other things that we need to share with folks. And that is, hold on here. I've already posted, the Dow or the S&P, where it went to and where it stopped, and it's doing actually okay. Frankly, it's hanging in there pretty good, given the fact that it's had such a big break. It's holding up okay. But going below those lows that we did on Friday, boy, that would really be a really nasty one, especially here in the S&P here. Here, as you can see, this is the E-mini S&P for today. You'll see we came down. This was a 78% off the low back here. You notice we just made a 382 retracement of the whole. Let me write this down so you'll be able to see it without any trouble. And you'll see there's your high, there's your low, and your 382 comes in here right about there at about 63. We're very, very close to that. So keep a close eye on that one as you're watching these things here unfold here this morning. Okay, now looking at this on the 4-hour chart, you'll see that we still have an outstanding target down here of 39.99, because there was your 382 here. You see it made it again, and we almost made it again here, but we didn't. And now the low today was an exact, to the tick, 786. It was just right on the money, as I recall. And though I was wrong. Oh yeah, there it is. Oh, it missed it. Oh, excuse me. It missed it by 4 points. 20 Dow points. So that's what we're watching here with the Dow E-mini right now, but it's having a little bit of a bounce. Well, it's a little bit of a bounce. 200 points in the Dow is not anything to have any qualms about, because that's a pretty big move. So let's remind ourselves of that. It's not just chicken feathers anymore. That's a lot of money. Let's look at this on the 4-minute, and you'll see here, there's what we're watching it on the smaller time frame, because there's where you want to be taking your shot, would be right up in here, right around the 46 70 level, and we're almost there right now, aren't we? Holy moly, guacamole. So we're going to find out if it can hold here right now. And since I'm doing this as we speak, I better put an order in. Hold on just 1 second. I'm not going to worry about it. I'll just let this run and see what happens with it. So it's so far, that's all it's done. These are almost equal rallies too. So it should stop, right in this ballpark right here. And if it doesn't, then maybe it'll continue to rally. Let's see how the Dow, there's your reason. See, there's your reason is the Dow Jones, here, let's get this up here. There's your low right back here. And you'll see there was a right on the money, hit the exact 50% retracement of the move right there at 450. And you can see we've already rallied back to the 61% retracement already right now. So that's why it's such a powerful move that we're watching in right here. So let's just keep that in mind, and we'll see what happens with some of these things that we're paying very, very close attention to here today. Okay, now we'll move on to the crude oil trade. If in fact it's going to work, and we don't know whether it is or not, right now it's trading at 70. So here's the way I'd handle that. I bought this here at 52. It's now trading at 72, so I'm putting my stop at break even. I know you think that's very tight, but this is a big market, folks. They play a lot of games in this market, and so you've got to be able to give them a little bit of leeway. So I'm going to put my stop at break even as opposed to putting it in here where it was the first time. I was risking 20 points. This is the kind of trade we'll be looking at on trading day on Friday. The first one would have been the bonds. That would have been the number one to be selling. And it's as you can see here, the bonds are really starting to weaken up now. They're down about 10 pips from the high that we made. So that's telling us that we're probably getting ready to see another big move here. At least a little bit lower in the market. And look at the Nasdaq. It's getting close to be the highs of the day, and it's only trying to make that's all it's going to be doing is if it gets up there, and it certainly could, we could get up here. That would be a 382 off of the high way back here in late August. That was the high in late August, and then this would be a 382 off of that. Let's look at, I don't trade this very often, but let's look at see why it came back so strongly. That's probably nope, it's 50%. I can tell you right now just by looking at that, that's exactly what it is. It makes 50%, and it's already rallied 176 points. That's what's pulling the Dow Jones up, and it doesn't make any difference what's pulling it, folks. It's going
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, we're back. I think I had lost electricity here at the house. We're back and running right now, but the Dow has rallied 250 points here, folks, in the last hour, so it's putting in a nice performance off the bottom here. If you'll notice here from the high down to this low, let's just draw. We're already, in fact, we're already above that 382 right now, as I recall. You'll just put it in, you'll see it. Yeah, we were in there at 80. Now it's at 407, and it's had a pretty good rally here. It must be they found out that Goldman Sachs was not going to go tapioca. So anyway, we'll follow that as we keep moving along. With some of these other things that we're watching. We've had a big move down here, starting to get a better move down here in the soybean market. Last night was a real nice selling opportunity. As you can see here, we were setting right at the 61% retracement, and then we rolled over, but we're getting ready for what I think will be a really nice buying opportunity. This is going to be our first really good ABCD, really easy one to see since our low was made down here. So the first thing we want to do is to look at this from the low to the high. We should be getting right at the old 382 as we speak right now. There it is at 997, folks. Boy, that's a really tempting one. Remember, this is an hourly chart, and I would say, my goodness, you got an ABCD setting right at the 61% retracement. Let's measure the last one right here. And you got another one right there. Oh, my goodness. I'm going to buy some beans right now at 9.97. And the low today has been 9.95 3/4. I'm going to risk 3 cents. I'm going to put a stop at 9.94. I'm only going to risk 3 cents. I'm going to become a farmer for $150. That's all I'm doing. That's a 382 off of this bottom. And boy, I tell you, if you'd have played some of these 382s on the way up, they would have paid handsomely to you. You can see this one right here misses it by 1 penny. This one catches it on pretty good. So it's not a bad deal buying the beans at that point. So I hope that's, gives you a little bit of insight of, what we're looking at here with the soybeans here today. So you're buying them at 9.97. And I think what I'm going to be doing, I try to keep this thing entertaining doing these trades, but frankly, some people can't do them, so it's not fair to them, and I don't need the extra pressure. But I'm long now from 9.97 with a stop at 9.94. I know it's a little tight, but that's the way I pull it. So I don't want to risk more than that. So I believe in this 382. If it's any good, it's not going to get much lower. Right now they're killing me. I'm down $25. So do what I say, not what I do. Let's move on here to the next one here as we look at some of these other things that we want to see. I want to bring up the chart of the wheat because that's another one that is getting ready for a pretty good move, I think, to the upside. We're waiting for a pullback here. Let's get this up here so we can see it here for today. We had a big run up in it last night, and then it started to sell off. It got up to this level right here. Oh, it's already made the high. Son of a gun. Hold on right here, folks. If you like ABCD, and we do, the high today was right there, and you can see what that would have been. Boy, this would have been a nice day to be trading live, wouldn't it, folks? Oh, shut the front door and raise the rent. Went to 77, and then it backed off all the way to 70 here. And the 70, if you take it from the last high to the next low, was, guess what? Right at the old 382. So that's what we're watching here with the wheat. That would have been a nice one, and it's held extremely well. Came down 1, 2, 3, 1, 2, 3 in an hourly market. So this market's still acting very bullish. That's the way you want to be looking at it. Remember, we had a really nice ABCD on this on the way down here on Monday. There's your ABCD right here coming in. Right there at the 63, the low was 62 or 61, so it came pretty much spot on, and then we've had this really good rally. As long as we don't get below this 382 right here, this has a positive bias to the upside. Now, selling it there at 77, you would have made 6 cents for sure. One thing for sure, if you'd have sold it at 77, it's trading right now at 74. I would have my stop right there at break even. I wouldn't risk any more than anything on that, because if it gets back up there, you could see with that 382, it could go, substantially higher if it in fact does that, and we'll find whether it does or not. Right now, we're out $25 in the soybeans, but that's the way the farmers play it. Sometimes it's winning days, sometimes it's losing days. Okay, now let's get back up here, and we'll take a quick look here. So far, you can see we went up a little above the 382 here. Really wild market in the Dow Jones, folks. Stop and think. We went from this morning, we went from 410. We dropped 600 Dow points at one time, and now we've rallied back half of that. That's how wild it is, and it's going to get wilder and wilder. This volatility is here to stay. I've had a question about Apple. Give me a second, and I'll get it up, and we'll take a quick look at Apple. It had some bad news. It's not doing too bad. It's up on the day again. Hold on just a second. There was no bad news at all. What are they talking about? There was nothing. See, it just came down a little below the 382 is all it did. There was nothing negative about Apple here. I think someone is eating something in their cereal besides raisins, but I don't know. I would not call this bearish at all. We just barely took out the low of the fourth by $1.50, and it didn't go anywhere. So this is nothing bearish at all about Apple. Now, I've also been asked to take a look at Tesla because we haven't seen it in quite some time. And we'll get up here. TSLA is right there. Tesla. Okay, here's Tesla. We're having a little bit of a bounce in here. Let me maybe put this up so everybody can see it. I want to do the defaults so that I can see the charts with the candles that I like to see. There's what I want to see. Here's what we've done over the last few days. Today's high in Tesla, it opened higher substantially. It gapped up, and it stopped, I believe, just about exactly at the 61% retracement. In fact, that's what it did, and now it's still up on the day, which is a good thing because there was your close yesterday. It's up on the day, so it's acting relatively well. And that in fact also is a pretty good sign. And then one other stock that we should look at, which is Goldman Sachs, because they announced that something happened with their trading desk or something like that. You're going to see a big gap down here. Yeah, well, there it is right there. You can see what's happened with Goldman Sachs. This is the second most expensive stock in the Dow, folks. United Healthcare is trading for, I don't know, it was above 6. I don't know where it is now, but there's where we are. Came right down to the 78% level in Goldman Sachs today. So if you're a Goldman Sachs aficionado, this is a buying opportunity. You'll see there it is right there. And I probably is an ABCD. There's AB. Here's CD. Now, that's a little bit lower, but remember, mathematics precedes geometry, so it should have held, and that's why it's rallying a little bit. So let's keep those things in mind as we unfold our tent today, and we're going to have, in 51 seconds, we're going to have Stan Harley up, and we want to look at one other thing, which was IBM. We had some stock people in here today. There's IBM. I haven't seen what it's doing. And then IBM made a new high today. Son of a gun, that's pretty good considering the rest of the, this is an hourly chart, but it's still a new high. Yep, it did. Made a slightly higher high. All right, we'll be right back. 877-927-6648.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, we're back, folks, and we have Stan Harley in the house. Stan, welcome again. What are you looking at today, my friend? A little volatility, perhaps?
Hey, Larry, how you doing?
I'm doing good, my friend.
Got some interesting charts I think the viewers are going to find tactically useful, shall we say.
I would not expect
Let's
anything
jump
less.
right into
Thank you,
them,
my
shall
friend.
we?
You got it.
The first chart here, Larry, is a monthly chart of the Dow Jones Industrials that I have uploaded to the program for the Foundation for the Study of Cycles. And what it does is a very, very detailed cyclical analysis of the data series, and I've dumped data in going back to the 1800s. This is a monthly scan of the Dow Jones Industrials right through the present. And what it does is it determines the dominant cycles in the data. And the dominant cycle that the program determines is a cycle that spans 41 months. And interestingly enough, this cycle didn't just pop up, it's been around for quite a long time. Indeed, Edward R. Dewey, who founded the Foundation for the Study of Cycles back in the 1940s, found this cycle early on in his research, wrote extensively about it, and here it is. Here we are in the 2020s, and it still remains. It's of course the dominant cycle, and as you can see, it appears to be cresting right in the present time frame. So what does that mean? It means the data is highly suggestive that we are fast approaching a major cyclical peak, and that's going to be my theme of what I'm talking about today.
Oh, okay. Sure does.
Separately, I've condensed the data down. This is still monthly data, but I've looked at the last 50 years. And what I have found is there is a shorter term cycle that populates the data series, and it has defined all of the highs of the Dow and the S&P. And it sprang forth from the December 1974 major bear market bottom. The S&P, of course, bottomed in September of that year. The Dow bottomed in December. The same result comes out to whichever data point I use, it doesn't matter. The cycle is about 150 months. And as you can see from the plot here on the screen, it has defined not only the 150-month cycle, but its Fibonacci permutations of 0.618, 0.236, 0.764. This cycle and its primary Fibonacci perturbations has defined every single major high in the stock market, 100% of them.
Wow.
As you can see. So counting from the December 1974 low, a 1.00 of that 150-month cycle aligned with the August 1987 peak. The second one aligned with the January 2000 high in the Dow, and then 0.618 aligned with the 2007 high, and so on. And I've got a big number 4 up here in bold. If we plug all those dates into a spreadsheet, which I've done here, and I put all the dates, and these columns just represent row numbers in my spreadsheet. But what it does is when I do a regression analysis, it finds the best mathematical fit to the data series, and it tells me the cycle is 149.73 weeks, rounded off to 150, and the next recurrence in that cycle is due in the vicinity of December 2024. And what is really interesting here is over a span of 50 years, from 1974 through 2024, that cycle has had a standard deviation of less than 1 month. Less than 1 month. That is.
Oh my God, that's unheard of.
Quite amazing. Where does that cycle come from? Well, cycles don't just fall from the sky. There is math. There is order here, I believe. Virtually all cycles have their roots grounded in some type of Fibonacci/Lucas relationship. And what I find is if I take the Fibonacci numbers and I multiply them by powers of 2, i.e. 2, 4, 8, 16, and then divide those numbers by the square root of 5, I get a series of numbers, and that defines a lot of the cycles I see in the stock market. So where am I going with this? Well, the mathematical derivation of this cycle is right here. Fibonacci 21 times 16 divided by the square root of 5 is 150, and that is the derivation of that cycle. Anyway, don't want to lose people in the math, but the takeaway here is that December 2024, with a standard deviation of 1 month, makes a very compelling case for a significant high in the stock market.
Wow, it's good information, my friend.
Let's drill this down to the weekly data. And if I look at the last 25 years or so, we can get some additional information that can be very tactically useful. I shared this with you on the air in the past on a number of times, and I'll just regurgitate it. But it's with the theme that I am making here, and that is the stock market is approaching a major top. If we look at the weekly chart and notice the high that occurred in March of 2000, 2007, these were all on the monthly chart. Now I'm showing it to you on the weekly chart. Notice they are separated by relationships tied to the Lucas series of numbers multiplied by 2. So I put a table up here in the upper left-hand corner. These are the Lucas numbers, 47 through 322. I've then multiplied those by 2. That's this column where my mouse is. And notice how the time counts in weeks between these highs in every single case, every single one, has been related to the Lucas number multiplied by 2. And if the pattern continues, we get up near 152 weeks from January 2022. 152 is the result of the Lucas number 76 multiplied by 2. That takes us to the second week in November of 2024. Then I put all those dates into a spreadsheet, done the regression analysis to find the mathematical best fit, and it says November 15th, 2024, with a standard deviation of about 2.7 weeks. Okay. So the monthly says, the 41 month says we're there. The 150-month cycle that I previously showed says December plus or minus 1 month. The weekly brings that down to the November time period. And I hear the music.
We'll talk more about that 150 because that's just the mind-boggling, the statistics behind that. I mean, that has no leeway at all. Hey, stay with us, folks. Stan Harley will be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, we're back, folks, with Stan Harley and his 150, and with a zero error. I don't think I've ever seen a statistic that strong, Stan.
It's very, very compelling, shall we
It sure is. Wow. It's talking about a long, long time span, too. I mean, that's just, wow.
It's not
It's
zero,
going to be
but
interesting
it's
to watch.
within about 1 month.
Well, listen, Stan, if this works, we'll have you on again.
That could be scary.
Well, we give you 7 days of a month. It's for the leeway, right. Okay?
Well, let's drill this down a little bit more, shall we?
Please do. Yes, sir. I'm all for it.
Let's look at some shorter time spans. We hear a lot from the financial media about how the market has a tendency to make October lows. It doesn't make a low every October, but in the last few years, it absolutely has. So there is certainly what we call recency bias in the minds of the media and traders and investors. But let's just take a look at a chart here. This goes back about 5 years. And what I've done here with purple lines is I've marked the dominant lows. We had one in 2020, one in October of 2021, 2022, 2023. And when I put those dates into my spreadsheet, I find that there is a cycle that's about 51.6 weeks. Call it 52 for round numbers, basically a year. And what it tells me is to look to the vicinity of October 11th, plus or minus a standard deviation of about 1.8 weeks. Interesting. Okay, got a high in November, but we have a low in October. Okay, let's file that away for the moment, and let's continue with that thinking. Let's look at the daily data. On the daily charts, Larry, I found that a short-term cycle that has defined all of the lows of the last year and a half or so, spanning pretty close to 24 trading days, right at 24 trading days. And I've shown them here on the chart with the purple lines, and you can see how regular this heartbeat has been on the daily chart. The most recent occurrence occurred just a few days ago, last Friday. And assuming the pattern continues, 24 trading days later lines up with October 10th, 11th. Oh, well, isn't that interesting? Because that coincides with the 51.6 week cycle. So we've got a cycle on the weekly chart bottoming around October 10th, October 11th. We have a daily cycle also bottoming about the same time frame. So very interesting. So when I put it all together, what does it tell me? I think we're liable to remain sort of in a trading range for the next month. We're going to get a bounce out of the low from last Friday, lasting approximately 2 weeks, I believe, and come right back down and make another low about a month from today, October 10th, 11th, somewhere in that time period. And then we're going to push higher out of that low into the final high. Now, the final high on the monthly chart says December plus or minus 1. The weekly data says middle of November. I'm going to drill this down a little bit more, utilizing this cycle, which I've shared with you and the viewers on the air. And the highs, unlike the lows, but the dominant highs have been coming in around 80 trading days. And I've gone back a couple of years, and I've shown here, as you can see with the purple lines, the dominant highs have occurred at 80 trading day intervals. A couple of times the cycle expanded by 2, or put another way, it skipped a beat. It skipped a beat here. So instead of being a 1.00 iteration, it went to 2.00, and you know, cycles do that. And when I put all of the dates of these high days into a spreadsheet, again, do a regression analysis, which is a mathematical technique I employ to find the best fit to the data series, it tells me the cycle is down here at the bottom, 80 trading days, and it's next, well, let me back up a second. I actually produced this spreadsheet several months ago, and I was looking for a high in the vicinity of July 18th. You know, the S&P topped on July 16, the Dow topped on July 18, same day. Yep. And I haven't updated the spreadsheet, but even if I put the new dates in, it won't change the analysis. The subsequent recurrence in this cycle is projected for around November the 8th. And the standard deviation on that is about 3 trading days. So what is all of this telling me? Well, my takeaway is this, Larry. I think we're going to be range-bound, choppy, volatile for about the next month. 2 weeks up, 2 weeks down, center translation, with a low in the vicinity of October 10, October 11. And then we're going to get a 1 month rally out of there into about the second week of November. A couple of big things going on that week. As you know, we have an election. We also have a 2-day Fed meeting.
Sure do. Yeah.
So will either of those two events coincide with a high? I don't know. We'll just have to wait and see. And it may be neither. The election results come out, nothing happens. The Fed result comes out, nothing happens, and maybe it's the next day or two and the market turns. I don't know. But the technical analysis from a cyclical perspective tells me to be taking a real close look at that second week in November, possibly third week, for what could be a very significant stock market high.
Wow. That's really good information. I don't think I've been doing this for so many years, and I've listened to what you said, but I've never seen this many mathematical things that line up so perfectly at one time, Stan. Honest to God, when you're talking about going back that many years and looking at 150, that's just it's just truly amazing. I mean, you really should have your have a golden halo put over your head, because you are now dubbed Mr. Lucas Fibonacci. That's going to be your new name. That is really incredible work, Stan. I've lost my breath when I saw that, how accurate it was, and they were over the time frame, and so many things are happening. This is someone we should pay attention to what's going on for sure.
Indeed.
Yeah, for sure. Listen, we only got a few more minutes here. Do you want to tell the folks how they could reach you if they'd like to get a sample of your wonderful letter?
I've got the information up on the screen, my contact information.
Okay, there you go. Okay.
If anyone has an interest, they're certainly welcome to get in touch with me.
This was really spectacular, Stan. I just can't tell you how amazed I am. I mean, I don't care if it works or not. The validity of it is so enticing that you have to pay such close attention to it. You know what I mean? It's really important. Yeah. I think it could be life-changing.
That's why you use technical analysis, Larry.
Yeah, well, that's I've been doing that for a couple of years, but not to that extent. Boy, I'm impaled when I listen to what you do compared to the others. So, hey, listen, but I want to really thank you again for being on the show today, because you do I really enjoy it. But thanks again, Stan. We'll have you on in a couple of weeks, okay?
Thank you so much. My pleasure. Look forward to it.
My pleasure too. Stan Harley, folks. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, here is a chart of the Treasury bonds. This is my sale of the day. We sold it up here at 28. Came all the way down 16, which would have made the first profit objective, and now we're still in it, and I would think that we're going to go maybe take this high out before the end of the day, but you can see the symmetry that we have here lines up pretty good. Now, I believe that the tomorrow the show will be going on, but on Thursday the TFNN will be moving, and so we won't have the show on Thursday, but we'll be doing the live trading and the regular show on Friday. Hope you can join us on the live trading. This would have been a really good day if we had that working today, but it turned out to be okay. Much better than yesterday, where I had Frustration City staring me in the face, and Paula Webb Douglas led me to the promised land and said, guess what? Tomorrow's another day, and sure enough, it certainly was. So anyway, that's what we're paying attention to here today. Friday will be the live trading from 9 to 12, and we have a caller in here, and we should be back up by Thursday. Okay, so we're not closed Thursday. Are we open tomorrow? What is it? Can someone tell me? Because I have a guest tomorrow. I have to cancel. He's going to let me know here. Moving tomorrow. So we'll see you folks on Thursday, and Jeff Huge will be our guest on Thursday and not on Wednesday. So live every day in an attitude of gratitude, and may God bless, and try to do something nice for your neighbors, folks, because they certainly need it, and they certainly do around my area anyway. So let's do that, and we'll have a lot of fun on our show tomorrow. But then Thursday, Thursday, we'll be off tomorrow on Thursday. Okay, so we'll see you all on Thursday, folks. So may God bless.